So some might actually argue that the Magnificent Seven is undervalued. Now, I want you to hear me out here because this is Nancy kind of alluded to this yesterday. If you use price to earnings and to growth, it's known as the PEG ratio, looking 2 years ahead, right? So the forward PEG ratio, the blue line, is actually lower for Alphabet, Amazon, Meta, also NVIDIA. That means arguably that these names are even cheaper looking out 2 years than they've been over the past 5 years. So the question is, was our next guest among the folks who bought the Magnificent Seven on the dip? Let's bring in the Kobeissi letter editor-in-chief, Adam Kobeissi. Adam, before we even get into the Mag 7, your letter was, I like the heading of your letter because today, on Monday rather, S&P 500 ends the most volatile week since March 2020 with minimal net change in price. It was a hell of a round trip, but what was the message to the market?
Yeah, it was. I think it was one of the greatest opportunities to buy some of these stocks at a bargain. NVIDIA was down, 30% from its high in a matter of weeks, and I think what the narrative here is that this whole carry trade unwinding situation was completely overdone. And we actually bought almost the low in our newsletter. But we went long at 5180. We're now calling for 5600, maybe even new all-time highs in the S&P 500, simply because it was an overblown reaction. The carry trade is still alive, even if the Fed cuts rates and the BOJ raises rates. It's still alive, and risk appetite is returning rapidly right now. So what we've learned in the past is the Magnificent Seven trade, and while, there are some of these stocks that are getting cheaper as they go up, so they say with, net income outpacing stock price appreciation, but it's also just kind of boils down to a very simple factor. These stocks have been a clear reflection of risk appetite, and anytime there's risk appetite, the stocks do great, and I think we've seen even over the last few days here, the S&P 500 is now up 300 points off of its low. These stocks, people are rotating right back into them, and I just don't think it makes sense to fight these clear market leaders in a time when risk appetite and the fundamentals really haven't changed. If anything, they might have even improved with the latest inflation data.
Yeah, it's what you say is really fascinating because, risk appetite, they're a proxy for that. Often when the market's shaky, they've been the safe haven. So on the other end of the spectrum, they're a proxy for that. And to your other point, the fundamentals certainly near term probably have gotten a lot better. This whole AI thing, let's be honest, it's just beginning. The hyperscalers are going to keep spending money, and sooner or later, everyone's going to have to incorporate it into their business to be able to compete. All right, I got your summary of analysis. You just talked a little bit about your bullishness on the S&P 500. I know you move your targets incrementally. What's the next big hurdle for the S&P 500?
Yeah, I think right now we're just seeing some more consolidation near term. It's all kind of looking ahead now as to what the Fed is going to do next month. We are calling for a rate cut. That rate cut, I think, is 25 basis points, which plays into some of our other trades in our summary, which I can get into. But for the S&P, I think, look, we're going to keep consolidating. I think dip buyers will continue to step in, and I think even if it's not a big gap higher, we continue to grind higher 15, 20 points at a time into that Fed meeting. But like I said, we're also kind of cautious on the bonds front. We're cautious on the gold front because we do believe that markets have gotten, again, way too dovish here. And even as someone calling for interest rate cuts, the question isn't even are they going to cut anymore. The question is 25 or 50 basis points with over 100 basis points of rate cuts priced in over the next few meetings. That's a very high bar, very high standard, and I think gold bonds are actually due for some pain and even a sell the news event when we do get that 25 basis point rate cut that we're calling for.
All right, here a recap. S&P 500 very bullish. West Texas Intermediate oil bullish. Right now bearish gold and bonds. Adam, thank you so much, my friend. Appreciate it.
Thanks, Charles. Thanks for having me.